Hello everyone, my name is Vimali Murugaya and today me and my groupmates going to present about life insurance policy. So basically life insurance is a specific kind of insurance policy that intend to give a financial support to the dependents in the event of sudden passing. A policyholders in the insurance industry makes a payment known as a premium to the insurer in exchange for the company's guarantee to pay a death benefits to the policyholders beneficiary in a event of the policyholder's sudden passing. There are many options while we are looking for an insurance policy. Lifetime insurance policy, universal insurance policy, whole life insurance policy, and also variable life insurance policy are several type of insurance policy falls under these categories. So let's look at term life insurance policy. So term life insurance policy is a form of insurance policy offering coverage for the set of time or terms. If the insurance individual dies during these policy terms, the death benefits will pay to the named beneficiary. These sort of insurance typically obtained to protect the dependents financially in the case if the insurance person dead. The premium for life insurance is determined by various factors including the insurance life, health, life expectancy, and the quantity of the coverage required. Let's talk about the whole life insurance policy. So the whole life insurance policy is a coverage remain in effect for the rest of the policyholder's life. Throughout the policyholder's life, the person pays a premium for the policy with a portion of the premium going towards the death benefits and the remaining model will be invested by the insurance company to generate the capital value. The cash value grows tax deferred over the time, so the policyholder doesn't have to pay the tax on the earning until they withdraw them. They also can borrow against it or utilize it to pay a premium. When they die, the death benefits is paid to their beneficiary and the amount is usually tax-free. Universal life insurance is a type of permanent life insurance that provide variable premium, debt payment, and also ability to accumulate capital value. In contrast to the traditional whole life insurance plan, the universal life insurance allow policyholders to change the premiums, death benefits, and also the asset used to pay the cash value component. The insurance company invests the cash value component and can be used to pay premium, reduce the death benefits, or be withdrawn as a tax-free loan by the policyholder. Although universal life insurance is more often expensive than life insurance, life-term insurance, its flexible and investment potential appeal to people seeking for long-term financial planning and protection. Variable life insurance is a type of permanent life insurance which the policyholder invests in sub-account that provide a mutual fund. These policyholders' premium are invested in a sub-account including stocks, bond, and other securities. This type of policy value can fluctuate depend on the performance of the investment. The policyholders can make an investment decision and may earn larger return than the standard life insurance policy.
I'm Dashni Balaraman. Now I would like to talk about the importance of life insurance. Life insurance should be one of the most important insurance because the life of a human being is one of the most expensive thing. The key factors to consider when selecting a life insurance policy include age, health, financial obligations, and budget. Considering these factors, you can decide to provide yourself and your loved one with the necessary protection and peace of mind. Now, I would like to explain about the importance of insurance. The first, life insurance helps secure our asset. When a breadwinner of a family dies, the household goes through huge financial problems. If that is unexpected, a policy can help cover the costs associated with final expenses. Life insurance can help provide immediate funds to pay outstanding debt and other costs associated with your passing. If we have children, it can also provide for their education, including college expenses, if the provider will allow the policy's cash value to be accessed for this purpose. According to the Insurance Act 1996, life insurance policies are defined as contracts between the policyholder and the insurer, in which the insurer agrees to pay a sum of money to the policyholder's beneficiaries upon the death of the policyholder or at the end of a specified period. The Act also sets out the requirements for the licensing and registration of insurers, agents and brokers, as well as the rules for sales. Next, life insurance provides income protection. Some life insurance can protect us against lost income due to death or illness. So even if we are not working at the moment, our family is still able to receive a payment each month. This ensures that they have enough money to live on until they can find another form of employment or decide if they want to open up their own business venture. The third is life insurance provides estate protection. A life insurance policy is the only way that our heirs will be able to access funds directly from our estate without paying any taxes on them. Depending size of our estate, we can design it different portions of it to go to each beneficiary so they will all share equally in receiving funds. Furthermore, life insurance helps to make transfer asset to loved one easier. Another benefit is that life insurance can help transfer our assets to loved ones without having to go through probate. Proceeds from the policy are received tax-free, so anyone who inherits money this way pays taxes on it only if they sell it or if there is a big difference between its purchase price and market value when they receive it. The fifth is life insurance provides retirement saving protection. When we are younger, life insurance can be used as a method of saving for retirement through our employer's plan or other types of qualified savings vehicles that are offered by the IRS. We will not have to pay income tax on the contributions until we withdraw the funds, which could allow them to grow at a fast rate before we reach retirement age. On average, this amount could be 6 times larger than what you put in due to compound interest over time. Lastly, life insurance helps with child education costs. When we begin planning for our child's education through as a saving plan, one of the best way to ensure they receive enough money is by investing in a permanent life insurance policy that provides them with funds at regular intervals over several years. This way, we know how much money is available and we can continue to pay the premiums as they go through school. There is enough money for them to enter adulthood without having to worry about it. Thank you.
Ladies and gentlemen, it is imperative that we carefully consider the coverage amount that is more suitable for our policyholder. This decision should be based on truly analyzing their income, debt, and expenses. Read and understand the legal requirement that involved in applying for a life insurance policy. This may include age restriction, medical examination, or disclosure of pre-existing condition, and providing accurate information during application process. Discuss how this requirement can help insurer assess risk and determine premium. Insurance company should be explained that any failures to disclose material fact and lead to policy cancellation or denial of claim, as it may be considered a breach of the duty of utmost good faith. One of the key benefits of having life insurance is that it provides financial security for the policyholder family in the event of their untimely death. This means that loved ones will not be burdened with financial obligation or expenses during a difficult time. emphasized that life insurance policy are contract governed by law to ensure fairness and protection for both the insured individual and the insurance company. The Insurance Act 1996 and the Financial Service Act 2030 control the key law pertaining to life insurance in Malaysia, which include the life insurance sector. When applying for a life insurance policy, several critical steps are involved in the process. First, you must complete an application form providing detailed information about yourself and your medical history. Next, you will be required to undergo a medical exam to have the insurance company assess your overall health and any potential risk. Finally, the insurance company will conduct a thorough underwriting process with involvers in policy costs. With involvers analyzing your application and medical exam result to determine your coverage, eligibility, and your policy costs. By following this step, you can ensure that you fully prepared to apply for a life insurance policy and secure the coverage you need to protect your loved one. In conclusion, you must choose the suitable life insurance policy for any possibility in the futures.
In order to prevent any unpleasant surprise for your loved one after your passing, it is essential to be informed that this policy could include exclusions and limitations. As a result, the policy does not provide coverage for all causes of death. Exclusions are cases for which an insurance company doesn't provide coverage for certain accidents. For example, accidents such as suicide, pre-existing condition, risky activities, and involvement in illegal activities. A limitation is the maximum amount of coverage that insurance company will pay for claim cover covered by your insurance policy. All policyholders need to consider the possibility of losing any insurance benefit if they are participate in any high risk activities, especially after they investing their hard-earned money in insurance. There are law and regulation in place to protect policyholders' interest in case of fraud by the insurance agent, such as under the Insurance Act 1996 and Financial Service Act 2013. Reading through your contract carefully is one approach to find out more about the exclusions and limitations listed on your life insurance policy. Your contract will clearly outline what is and isn't covered by your insurance policy. Despite the fact that the contract might be complicated and complex for you to understand, it may be a good idea for you to meet with your life insurance agent so that they can explain more in detail for you.
Good afternoon to our lecturer. My name is Nur Anshahida binti Zainal Abidin. I would like to present about how to file life insurance claim relating them to legal aspect. Firstly, understand the policy term. Review the life insurance policies and familiarize yourself with its term and condition. Policies are legally binding contract and it's crucial to understand the coverage, beneficiary designation and claim procedure outlined in the policy. Second, comply with notification requirement. Life insurance policy typically require the beneficiaries or their representative to notify the insurance company promptly after the policyholder dates. Failure to comply with the notification requirement might result in claim denial or delay. Third, provide accurate information. When filing a life insurance claim, it's essential to provide accurate and complete information to the insurance company. Misrepresenting facts or withholding relevant information may be considered insurance fraud, which is illegal and can result in claim denial or legal consequences. And next, submit required document within the specific time frame. Insurance companies may have specific deadline for submitting claim forms and supporting document. Failure to meet this deadline may affect the claim validity. Adhering to the prescribed time frame, ensure the compliance with legal requirement and maximize the change of a successful claim. Next, we have to understand constability period. Life insurance policies often have constability period, typically the first 2 years after the policy's issuance. During this period, the insurance company have the right to investigate the policyholder medical history and other information provided. If any misrepresentation or fraud is discovered during the period, the claim may be denied. 6. Legal advice if the claim is denied. In case of claim denial, beneficiaries have the right to dispute the decision. Consult with an attorney specializing in insurance law to understand your legal option. Review the denial reason and determine the appropriate course of action. Pursue a fair resolution. And next, you have to be aware of beneficiary rights. Beneficiaries are entitled to receive the life insurance proceeds as stated in the policy. If there are any dispute or concern regarding the designated beneficiaries, legal advice may be necessary to understand the right and potential remedies available. And lastly, we have to stay informed about relevant laws and relevant law and regulation. Insurance law and regulation can vary by jurisdiction and may change over time. Staying informed about the applicable law ensure compliance and help beneficiaries understand their right and obligation when filing a life insurance claim. It is important to note that the legal aspect of filing a life insurance claim can be complex and vary depending on your jurisdiction and the specific circumstance. Therefore, it's advisable to consult with a legal professional experienced in insurance matters to ensure proper compliance and protection of your right. Thank you.
In order to prevent any unpleasant surprise for your loved one after your passing, it is essential to be informed that this policy could include exclusions and limitations. As a result, the policy does not provide coverage for all causes of death. Exclusions are cases for which an insurance company doesn't provide coverage for certain accidents. For example, accidents such as suicide, pre-existing condition, risky activities, and involvement in illegal activities. A limitation is the maximum amount of coverage that insurance company will pay for claim cover covered by your insurance policy. All policyholders need to consider the possibility of losing any insurance benefit if they are participate in any high risk activities, especially after they investing their hard-earned money in insurance. There are law and regulation in place to protect policyholders' interest in case of fraud by the insurance agent, such as under the Insurance Act 1996 and Financial Service Act 2013. Reading through your contract carefully is one approach to find out more about the exclusions and limitations listed on your life insurance policy.
Your contract will clearly outline what is and isn't covered by your insurance policy. Despite the fact that the contract might be complicated and complex for you to understand, it may be a good idea for you to meet with your life insurance agent so that they can explain more in detail for you.